And this is part 7 of Hurricane, the Coming Crash from orangequant.com. In part 7, we're going to review charts. We're finally getting to charts here, and we're going to start with part 7 of charts. It's going to be quite a series of charts, and we're going to start that right about now. And in this series of chart presentations, I want to start with a discussion of the volatility index, which many of you have heard of. It's also known as the VIX. It's also known as the fear index. And later we will come to some SPY charts, but the VIX is very interesting. As you probably know, the higher the VIX, the more fear there is in the market and the more likely the market is to crash away. Now, I'm going to take this from the biggest time frame down to the smallest. I could have shown you an annual VIX chart, but I didn't feel there was enough data to really get our teeth into. So this first one is the VIX quarterly chart. So each of those candles represents a quarter. In other words, let me mark something for you here in let's pick a color. Let's say bright blue. And right now we're over here in March, this last candle to the right. This is the quarter, January, February, March, that we're looking at right here. And then the next one back would be the last quarter of last year, then the third quarter of last year, then the second, and the first. So with this blue candle where I'm making it blue, or I'm trying desperately to make it blue, I'm going to make it blue one way or the other. This candle right here that I have now painted blue would have been the first quarter of 2009. In fact, it's easier to see if I make it bright yellow like that. Okay. Now, you can see, if you go back a ways, how the VIX related to the overall market. For example, if we go back here to 08, not 08, I'm sorry, this is 09, you'll remember that in about March of 09, that would have been like the end of the first quarter of 09, and that would have been the next candle after that yellow one. You can see the VIX going down, and that marked the start of the run-up in the market until the present day. Okay? And at the present time, we're down, as you can see, to 17.79 on the VIX. I'm going to scroll to the left and reach back historically here. Remember that number, 17.79, and which was right around, I'm going to draw a line here, which was right around here, okay? And you can see that's kind of a support level on the VIX. And it could go below that, which means if it goes down, if it breaks through that support level, then happy days are here again for a short while. And I say for a short while because if we go back to the right to the current time, okay, this indicator down here, which I've explained before, and which the details of which I share with those who have the FLIR 2 ebook if they request it, you can see by this indicator, which I use to confirm H205 and synthetic trend lines sometimes, which we will probably be showing you on the VIX in later videos. Anyway, this indicator is not one I developed. Someone else developed it. And I love it for confirmation of my H205 and synthetics readings. You can see that these plots are way down. They're about as far down as they can go. In fact, they are as far down as they can go. That means they have to reverse. When they reverse, it means the VIX is going to go up. Now, how long can it stay down there? Well, if you look to the left here, you can see this sort of necklace of candles for different quarters, and it stayed down quite some time before it started to break above this COS line, cosine line, and then it started to move up, and the VIX moved up accordingly. What we have is a situation where this purple line is looking like it's going to try to cross the gray line. And if you look at this plot, pause the video, you'll see whenever that happens, the VIX runs up. So that's one issue. And the other issue is that we are nearing a support level on the VIX. Okay, so it's either going to bounce or go through. Based on this lower plot, I'm saying I think it's going to bounce. So the VIX is probably going to go up in the coming quarter. So much for the quarterly VIX. Let's look at the monthly VIX. As you can see, it's already bouncing off this lower level right here. Let me get some color for you. It's already bouncing off that cosine level there, and it's kind of a similar pattern to the quarterly, a little bit different, but it's coming down. And let's see what the historical low is. Well, that's support too, right here on the monthly. It can get a little bit lower, like one grid level lower, and I'll go back and show you where that is. This would be one grid level lower. It can go to as far down as that. But right now where it is a strong support level. Again, you can see how strong that support level is. So it could break through to that secondary support, which means the market will go up some. On the other hand, it could bounce. This could be the last month of it being down so low. It could bounce and start to run up, which would drive the market down. Now, we've talked about the many factors influencing whether or not the market is going to take a hit, and I don't want to belabor the point. Let's move on to some other charts in the next video. I'm Dennis Hudson at orangequant.com, and thank you for joining me here. Oh, and by the way, I will get around at some point to picking a date for the crash. I'm still looking at that, and you'll see the evolution of my thinking as we go along. And then maybe you'll have some thoughts. Post your comments, please.